everyone. I'm Tom Thornton with Hedge Fund Telemetry, and today we're going to do another market update. And the title of this update is The Bounce Over. So I have about 40 slides to get through, and then we'll take some of your questions, chart requests, and we'll get right into it. But beforehand, this is our disclaimer. There is risk in markets. This is not a solicitation. Please refer to your licensed financial analyst or advisor for any ideas that you see here that you might want to take part of. So let's get started into it. Okay, so the trade ideas sheet has started off the year not in the best condition. I will say I did not get the number of signals I wanted to get long this market, and it's been a market of a lot of mean reversion after last year's slam. I am happy that I did cover a ton of stuff late in the year, a lot of tech. Tesla, I covered lower, and now I'm starting to add back. So this is my spreadsheet. It's all on the website. I usually will put the spreadsheet in on the notes just because it formats a little better than what we have on the website. You can also track the last 5 trades that were closed and all the historical trades at the bottom with those links. So let's just go through. Shorts have covered. This was yesterday. Jonathan Scott Rudner from Goldman Sachs put this out last week. We talked about how their prime book, which is their brokerage that all the hedge funds clients of theirs, they get all their data compiled, and they basically can see everything that everybody's doing. And they said that the short covering was in the 99.4 percentile versus the last 11 years. That's really, really extreme. So the thing is, it's all been about positioning. I think a lot of accounts have been offsides. People have covered, and that's evident on a few other charts that I'm going to show you as well. I think that people have repositioned with the CTAs. The trend following CTAs are basically fully long right now. The Goldman Sachs most shorted basket, which I show a lot, actually every day. I show the subcomponents with all the different sectors. This bounced really, really nice, and it had another DeMark sell. Let me get my point right here. It had a sell set up 9 here. It worked well here, and it worked well here, and it's currently giving back. So the shorts are actually making money again, and in the last 5 days, they've made more money on the short side than longs. And this is the Goldman Sachs most owned VIP basket. It's GBIP. You can look it up. This is the basket of stocks that are most owned by their hedge fund clients. And we have a new combo 13 here and a sell setup 9 here. So it's just starting to fade a little bit right here. So let's see, this is actually 5 waves up as well. So you had 1, this blue waves are the ones on the upside. 2, that's a higher low, which makes wave 2. Wave 3 right here had a 13, a sequential 13, and backed off into wave 4, another higher low. And now we're at the 78.43 wave 5 price objective. And I think that you can also see the RSI is starting to slip. This indicator is a Bloomberg indicator called the Fear and Greed indicator. It is an oscillator. I picked up on using this a while back, and it's not a sentiment indicator, but it's an oscillator, and I think it works pretty well, spotting some when you start to see the green tick down and move into red, as well when you start to see the red move a little higher and into green. This is another one I showed last week. This is the Goldman Sachs long versus short momentum factor basket. So we're looking at momentum This is actually a really good one, capturing the October low in the market. And if we have these now with new buy signals, I think this could be a change in market tone. At UBS, Rebecca Chung put out this yesterday, and she actually has a very similar belief as Goldman Sachs derivative traders, of what they're saying. And I thought this was interesting. The ETF short interest percentage of shares, it's real low. It's in the very low percentiles right now. And she did mention that she believed that the Nasdaq 100 QQQ hedging is exceptionally low. On the right-hand side here, this is the top 25 S&P stocks put call ratio. And as you see here, it's very low. It's actually lower than the last couple of years. And I think that just says that we've seen this giant call buying, and we'll go through some of that as well. This one's a little terrifying, but CTAs are large macro multi-strat hedge funds that are trend followers. And basically Goldman Sachs and Citi and JP Morgan and UBS, they all have an algorithm as far as what they see and what they believe CTAs are positioned, how they are positioned. Take it with a little bit of a grain of salt, but what it's showing here is in the blue line, they are pretty much fully maxed out long here. And those other lines, the orange line here, is if we have a down 1 standard deviation move of what would happen with their, what they would have to do is they would have to sell their long positions. And the yellow is a 2 standard deviation move. So it really stands out, obviously. This is more from the Goldman desk. What stands out is if we have over the next month a down tape, again, that 2 standard deviation type move, there's $213 billion to sell. So that just can give you a little bit of a fear in here as well. So the S&P 500 daily, well, we had this, this was the CPI, and we had a sequential 13 sell count down here, worked well. What's interesting is we had 5 waves down here into October. This blue one is the first wave up. Nobody believed it. Second wave was a higher low, wave 2. Third wave, you got a lot more people involved. Basically hit the upside wave 3 price objective, and you had a 13 in here. What's interesting is when you have a wave 3 and you get a 13, is that it's not necessarily the sell everything type call, because what we're expecting then is a higher low wave 4, which we got. And now we did move into wave 5. So we're in wave 5. We had a sell setup 9. There still is a combo 11 here. And for the combo to continue, you would need to have 2 more new highs above this level. And there is an upside wave 5 price objective that's out there at 43.02. Now, keep in mind the price objectives on the waves, and we track the wave 3 and wave 5 price objectives. Those are not necessarily, they don't necessarily always come to fruition exactly. They're a guide, and they're highlighted in Jason Pearl's book that on DeMark. If you do not have it, please email me and I will send you a copy. I have some hard copy books right now. And if you're overseas, I'm going to send you a PDF. Now, this is something I really like as well, and I think there's a big divergence happening right now. And this goes back to 2020, and you see this is right before COVID hit, and we had a pretty sizable move down. This is what happens when you have QE and the Fed behind the move. You have 13s and you have 9s, and you have these very shallow under 5% pullbacks and stalling periods. So you don't necessarily get with every 13 1987, but you do get a period of stalling, and that's what we saw At the end of 2021, we had a sequential 13. And as you see, we've had some pretty good reactions with the setup nines. And setup nines are always come before the 13s. And they actually work pretty well within ranges. And so I think that it's an interesting period right now, because here's that 13 that we had with that CPI number. This was back in October or late September. We had the buy countdown 13s here. We took advantage of that and we're buyers there. And last year we were really fortunate that we had these 13s and nines to be able to really work well, being able to buy the dips. So right now we have the sell setup 9. That arrow is perfected, which basically means that the 9 occurred higher than the 6th and 7th bar high. And that's a good sign. But this is what's really standing out. And this is the percentage of stocks above the 50-day moving average. I track everything with DeMark indicators, RSI, percentage of stocks above the 30-day or 50-day moving average. And as you see here, these 13s here, these 13s here, down here as well, they worked well in correspondence with the index price. But here you see this divergence. And it's interesting because the S&P and the Nasdaq, and I'll show you that in a second, did get higher, almost 5% on the S&P and 8% for the Nasdaq above, but the components did not make a new high here. So I think that's an interesting divergence. The Nasdaq 100 daily. So sometimes I've got to use a little bit of my experience using DeMark indicators and what I expect. And I felt this sell setup 9 was an important level here, especially since we had a very high RSI. The fear and greed was pretty maxed out as well. And I said, just be a little cautious with these this sequential that started. Sometimes I like to see the sequential start for a few days and carry higher. It basically failed after 2 days. And the one little DeMark aspect as far as how that sequential might cancel. So we're currently right now on day 3 of 9 with a setup on the downside. And if that continues to 9, we're basically have to have 9 consecutive days lower than the 4 days previous close. If that continues, then that pending sequential will cancel. The other indicator to watch is this green line here. It's a TDST. It's roughly around 11, let's say 300. I don't have it. It's a little covered up here with another indicator. But if that breaks below that, then the pending sequential will cancel. And that's happened in the past as well. So I'm gearing off of that 9. I put more weight into that, and I'll be honest, I was wrong, because we did have a pending sequential on the downside here that actually, when you got this 9, that sequential canceled. So it's a dynamic indicator, and you have to be cognizant of what's happening. So on the NDX, we did get a combo. The combos are in pink, and those are a bit higher termination requirement than the sequential. We had a sequential here. And it's interesting that we had the sequential here really, really early on that bounce. But we did get a little higher. So this isn't a divergence, but it has dropped down pretty quickly. So the poster children for this market, I would say, are Tesla and Nvidia. And they basically trade almost identical to each other. Maybe the same traders are doing this. It's a good proxy for risk on. So basically right now, this basket together, we do have a sequential and combo 13 in play. And the rule of thumb is when you get a countdown 13, you have about a 10-day period that you should start to see a reversal take place. And with that in mind, I think we're a day or two away from both Nvidia and Tesla getting sequential. So we may not get the combos on that, and but I think that it's it's pretty clear that these are a bit extended. And you look at the RSI over 70, well, it was well over 70%. Last time we did this webinar on the 24th, I brought up something that I didn't get a lot of feedback on, but I think it was important because we had a lot of sell countdown 13s. When you see multiple combo 13s, it's because I use two different versions, one the default and one is more strict. And I said, watch out, I think these could pull back. I was short Alibaba, took profits a little early, but did make money. I was short FXI and took profits on that as well. And the Hang Seng also was at risk. Now you have a buy countdown or a buy setup 9. So it's going to be interesting to see if it can bounce from here or if after you get a setup 9 and a continuation happens, a new sequential will start on the downside. But I did think at that time it was overdone. And this is KWeb, another one that a lot of people watch. And so we'll watch and see if this one continues lower. And I've been short the Euro Stocks 50 index, which FEZ is the ticker. There are other tickers that you can use. I'm also short some of the other countries, Germany, France, Italy, Spain. I think that when I'm short, but one of the reasons for those is I also believe that the euro is about ready to turn, and it started to turn, and those have a lot of currency exposure. And this just started to stand out to me. This is the European Bank Index. You've horrendous news happening with Credit Suisse, and this now has sell countdown 13s. We also have seen it in the XLF in the US. JP Morgan had an exhaustion 13, Wells Fargo, Bank of America, State Street, probably some more, but you can always check on the mid-morning note when I post the DeMark screens, and you can see what's interesting is you can see the grouping. So if you start to see a bunch of energy stocks on the downside getting buy countdown 13s, it's probably telling you that it's a good time to start looking at buying. And when you start to see sell countdowns in a particular sector, like the financials, it's a good time to start to sell. Okay, now let's get into some of the craziness. This was from Goldman Sachs. The total daily option call volume has gone ballistic. And as we know, it's been talked about a lot, the zero data expiration call activity, which is basically that they said it's about a 6.5 hour hold time that people are holding options now. That is crazy. And I think that since you have the now that you have expirations almost every day on SPYs, Qs, you name it, it's gotten a casino-like market. Now, this is the 5-day moving average of the equity put call ratio. And as you see here, it spiked really, really high at the end of the year. And I would say that some of that was just extreme put buying. And this is part of the reason why traders were so offsides coming into the year, because they had such high exposure with puts and in the short term that they had to unwind those puts, and the dealers basically had to unwind their hedges, and it caused a nice squeeze. So now we're back down to levels where I would say it's probably at risk for a market to decline. The advanced decline data, this actually has, negative divergence on the S&P, just like the percentage of stocks above the 50-day. But we did have a new high on the mid cap and the small cap, and now we're seeing declines on those. I love this one. It's the Nasdaq Summation Index. It's basically a McClellan oscillator type of early bird, early warning, canary in a coal mine type thing. What I've done is I put a couple, for momentum indicators. These two on the bottom here are a little faster, and they get overbought and oversold faster, and they're the first to turn. RSI, this is where I was a little off this year. So basically, we did bounce off October. We came down, and I thought we were going to see this thing break lower because above zero is basically when the market knows that it's a bull market or it's a bullish period. So I was a little offsides on this. It really spiked. You had a big move with the Nasdaq, but now we're back to the overbought zone. And if you squint here, you can see there's a little red downtick bar here. So we might be topping out here, and we've topped out here at other times. And yeah, this was a really good positive divergence here with the MACD and this RSI. So I'm sorry, I really was, I really missed that one. And it doesn't happen often because you don't normally get that, but that's what we had this year. This is a S&P Internals. So this is more McClellan stuff. The McClellan oscillator for the S&P has reversed under zero. This is the summation index for the S&P, and as you see here, it started to downtick after getting to levels where it's typically topped out. And then an advanced decline ratio is moving lower as well, and that's breaking under zero. Nobody likes the VIX anymore, and the VIX is extinct because you have zero data expiration options. But I don't know if that's necessarily true because it has been skewed since the VIX is it looks out 30 days on the traditional third Friday expiration. But this is a longer term view of the VIX bullish sentiment. So we're exceptionally low down here. And I think that we could see a spike. And I'm not necessarily saying that we're going to go back to 60. I don't think that's necessarily in the cards yet, but it's possible. And we did have a spike, short-term move with these DeMark countdown 13s on the VIX, but it didn't last. It went to the 50-day, and that was it. Not that the moving averages matter that much, but it's kind of interesting how the 50-day is starting to flatten here, and it's above the 50-day here. So let's see what happens. And actually, interesting, the fear and greed just started to turn green as well. So I'm cognizant of this. I'm not sure that we're going to get the crazy spikes, but anything is possible. And my friend Andrew Thrasher, who runs Thrasher Analytics, he has a newsletter that I highly recommend. He is a top-notch, great guy. He won the Charles Dow Award for his studies on the VIX. And I don't know the exact parameters of everything that that goes into it. I read the study years ago. Can't remember it, but basically, when I see Andrew talking about it and showing these green arrows, we had one just a few weeks ago, and now we have a new one. It's telling me that this is coiling, and we certainly could see something happen. Okay, so let's get into some of the macro stuff that I think is really important. So on the website, if you haven't gone on and clicked through some of the sentiment stuff, it defaults at 1 year, but you can change the parameters and look back at various times, and some of the sentiment indicators we have can go back to 2000, and you can actually look back and chop and look at what happened during the great financial crisis. Some data, I will say, as we migrated to the new site, there is a little bit of corruption in a few things. So like this one right here. But this is a 2-year look back on the dollar. And what I like to tell people is that what I like to show people is when you have the sentiment up here in this bullish range and it's above 50%, it can continue. Sentiment is a condition, not a trigger. Sometimes when you get the ultra low, under 5% or above 95%, I'd basically bet against that anytime because that usually does not persist. But right now it's oversold. It's been trying to make a lift here. And again, if we can start to see, it's hard to see, but you can see the 20-day moving average of the sentiment is starting to make a little bit of a turn up. It's going to take a little bit more, and above 50%, I think then we have something a little bit more substantial ahead of us. And the dollar index with the DeMark indicators, we had, so here's a good example of wave 313. So we had a wave 313, sequential 13 in red, and this spike here was above, that made a 13-day closing high, and that is the parameter for wave 4 to occur. Now, wave 2 needs a 8-day closing high, and we got it there. So we had wave 2, and that's a lower high. That was wave 5 up here. Anyway, we carved down 5 waves. We had 2 combo 13s, the strict one here, and a little bit of residual momentum. And now it looks like it's trying to make a turn. And I would say above 104 and 105, this thing could see some squeezing here. This is a propulsion indicator. It's not yet confirmed, but if we do confirm it, and I'll let you know, 105.89 is the target. And the euro it's the same, it's the opposite here. But this is partly why I have been short some of the sector ETFs in the US for Germany and others, that I think these will cool off. And the fear and greed is lower. This is back under 50%. It's looking a little weak. Gold. I had a lot of people that asked, why are you short gold? Or why did you short gold? Partly because we did get a peak reading on the bullish sentiment reading. It's rare that you get them above 90%, and we were getting DeMark sell countdown 13s as well. We up here, this was the Ukraine start and gold spiked. I actually sold the last time I was long gold up here, which hit the upside wave 5 price objective. What's interesting here too is that sentiment has been diverging lower while the gold made a new high. I think that's important. This is the DeMark chart. First of all, as you see, we have a secondary countdown up here. I think we're going to see this come down under 170. 167.91 is the TDST line, and that's the true low of when the last setup occurred. So basically, I use this as a support level, and I think that's going to be important. A lot of people will be watching this flattened 200-day moving average. Okay, that's fine. Copper was another one we discussed last time with a cluster of DeMark sell countdown 13s and a sell setup 9 in wave 5 at wave 5's upside price objective. Wave 3 came pretty close here. So now we've pulled back. We have a buy setup 9, and it's struggling to try and make a move here. I still think that this can come lower. So we'll keep an eye on that. I'm still short the copper miners. Crude bullish sentiment. Sorry. This one's been a struggle. And right here, just going back a little, I thought this was going to be a good higher low, and it failed and made a new low. So it's still struggling here. It needs to get above 50%, and I'll say above this level here to really show something. But you do see these, the 200-day or this 20-day moving average has been a good indicator of with sentiment here as well. And it's flattening here. So I think that there is a bullish setup coming for crude. Maybe we even have it because we did get the buy setup 9, which I showed you earlier this week and previewed it on the commodity weekly. There is a propulsion target at 83.10. We have a buy setup, or excuse me, sell setup 4 on the upside. And if we get to 9, we've seen 9s here. I think there was another one up, yeah, right here. You can't see it, but those were pretty good levels to sell. So it's pretty clear what we do need to get through is this mid 80s congestion, and if we get through that, then let's see. And someone was asking about the Russians cutting off or cutting oil. You probably know more about it than me, but anytime you reduce supply, what's going to happen here? It's going to go up. Natural gas, still long, but we did get waited for this cluster of 13s. It has some residual momentum on the downside. Let's see. I don't think it might be. It's a struggle. Honestly, it's a struggle. It's up about a percent today. Nothing really going, but it does. It is very oversold. Natural gas sentiment was very overdone, but it hasn't turned yet. It's a wave 3, so expect a lower high. Um, uh, and a lower high bounce, corrective bounce. I don't think we're going to the old highs up here, which, yep, those were good sell signals. And if you look back, natural gas bullish sentiment was extreme. Looking at bonds, again, I think there's a big trade in the market. Last year it was to be short bonds, short stocks, long commodities, long the dollar, and I think some of that is reversing. And bond sentiment has really been struggling to get above the midpoint. And why do I call it the midpoint? It's because I see that once you get above that, then you have the majority of people that are involved turning bullish. And that's not necessarily saying that's bad, because the trend with sentiment can work. And when you get to those extreme levels, that's when you want to start to take notice. But the one period I think is interesting is the 2-year stalled with all these 13s here, and it's gone sideways to down, held the 4% level, and now it's trying to reemerge. And I think that that's the market starting to figure out that the Fed's going to keep raising, and inflation is not necessarily that under control. Especially the University of Michigan data today showed some higher inflation data. A little bit of a concern for the people that are praying for a pivot. Here's the 10-year. Okay, this is actually good, the more knowledge stuff for you guys. So basically, so the 9s have been pretty good at spotting inflection points, but we did start a sequential, and you only can start a sequential after a 9, and that's a continuation pattern. The sequential can go sideways. It doesn't have to come, or each number comes each day. Basically, each number is added when, for in this example, making a 2-day low versus the previous 2 days low price. But it's pending on day 6, and it's reversed up. It's on day 5 of the setup. And if you get to 9, this pending countdown will cancel, and you'll have the 9. Now, the other level I'm watching right here is 3.8748. This is this red line here. This one is the TDST, and that is drawn off the true high from this setup here. So you get these after a 9, you get support levels. So this 9 here, off the low here, green line here. So basically you're in this range, went a little below, but it didn't really break it. And fear and greed is starting to continue. 30-year, same story, almost identical. 3.96 is the level to watch on that. Okay, Bitcoin, bullish sentiment. This was basically a dead asset all year from last May. And then you started to see it break above recent highs, and it lifted. It moved to 70, which coincidentally was the high here back in, it was May. And that was considerably higher. So sentiment really, I like it because it's 0 to 100, and you can kind of gear off of previous price levels on sentiment versus Bitcoin or the index price. So it got a little overdone here, and you had a lot of DeMark sell countdown 13s. It's wave 3. So we did qualify wave 4. And if this does reverse and breaks above this level here, 28,308 is the price objective. Now, this was the wave 3 price objective that just was murdered because it went well beyond. But we also have the fear and greed starting to turn red again. And I think that I'm not a Bitcoin bull or bear. I just talk about it with my indicators. And so that does it for the presentation. I will take questions. I'll get to as many as possible, but just so you know, we do have in stock the hedge fund Telemetry Patagonia Fleece jackets and vests, and we have been sending them out. If you have inquired about them and you did not get a response or were not charged, please let me know. We have small and I think we have some mediums, some small on order. We have extra large and large right now. And I will say it's rather cozy, although it's 56 degrees here in Greenwich today. So that is the presentation.